Welcome to KonceptCraft. Introducing the Accounting Arena book, your ultimate guide to mastering the fundamentals of accounting. Embrace the world of accounting knowledge at your fingertips. Act now, and get your copy of Accounting Arena ebook. Link is available in the description below. Keep learning. Keep growing. Happy learning. Now let's begin our today's lesson.
Leases. Leases are contracts that grant the right to use an asset for a specified period of time in exchange for a payment, or a series of payments. Leases can be classified into two types: operating leases and finance leases. Operating leases are short-term leases that do not transfer substantially all the risks and rewards of ownership of the asset to the lessee. Finance leases are long-term leases that do transfer substantially all the risks and rewards of ownership of the asset to the lessee. The accounting treatment of leases depends on the type of lease and the perspective of the parties involved. A lease refers to a contractual agreement between two parties, known as the lessor and the lessee, whereby the lessor grants the lessee the right to use an asset in exchange for periodic payments over a specified period. Leases are commonly used for various types of assets, including real estate, vehicles, equipment, and more. Here are some key elements and concepts related to leases. Lessor. The lessor is the owner of the asset being leased. They grant the right to use the asset to the lessee in exchange for lease payments. Lessee. The lessee is the party that obtains the right to use the asset through the lease agreement. They make lease payments to the lessor in exchange for the use of the asset. Lease term. The lease term refers to the specific period during which the lessee has the right to use the asset as defined in the lease agreement. It includes the initial term and any optional renewal or extension periods. Lease payments. The lessee is required to make periodic lease payments to the lessor during the lease term. These payments can be structured in various ways, such as monthly, quarterly, or annually. Lease commencement date. The lease commencement date is the point at which the lessee officially gains control and begins using the leased asset. Lease classification. Leases are classified into two main types: operating leases and finance leases, also known as capital leases. The classification depends on the extent of control and risk transferred from the lessor to the lessee. Operating lease. In an operating lease, the lessor retains ownership and substantially all the risks and rewards associated with the leased asset. The lessee uses the asset for a shorter period, typically less than the asset's entire economic life. Operating leases are generally treated as rental agreements, and lease payments are expensed as operating expenses. Finance lease. Capital lease. A finance lease transfers substantially all the risks and rewards of ownership from the lessor to the lessee. The lessee effectively assumes ownership for accounting purposes, and the lease is recorded as a liability on the lessee's balance sheet. Lease payments are allocated between interest expense and a reduction of the lease liability. Right of use (RU) asset. In accounting for leases under the International Financial Reporting Standards (IFRS) and the Financial Accounting Standards Board (FASB) in the United States, lessees are required to recognize a right of use (RU) asset and a lease liability on their balance sheets for most leases. Lease accounting standards. Accounting standards such as IFRS 16 and ASC 842 have significantly changed lease accounting rules for lessees, bringing many operating leases onto the balance sheet as RU assets and lease liabilities. This change aims to provide a more transparent representation of a company's lease obligations. Leases are important in business operations as they provide flexibility in acquiring and using assets without the need for substantial upfront purchase costs. The terms and conditions of leases can vary widely, and it's essential for both lessors and lessees to carefully review and understand the lease agreements, including their financial implications and disclosure requirements, as per relevant accounting standards.